start.
On behalf of SIRC of ICAI, on behalf of the Regional Council, it's a great honor to host this wonderful session on CSR and auditors' responsibilities. I thank the Council for giving me, Chairman and the Council for giving me this opportunity to be part of this session. The speaker of the day is a wonderful speaker, my longtime friend, highly knowledgeable person. I'll just read his profile for you. CA Kamal Garg is a fellow member of the Institute of Chartered Accountants of India and a first-class Commerce Baccalaureate from Deen Dayal Upadhyaya College, University of Delhi, and an academic resource person in KGMA, Delhi. He has also qualified post-qualification course on Diploma in Information System Audit conducted by ICAI. Besides this, he is an insolvency professional registered with IBBA. He was also the member of the Board of Studies, Study Material Research Group 2009 to 10 of NIRC of ICAI, and a special invitee member of Accounting Standards Board for the year 2012 to 13, 20 to 21, 22 to 23. Financial Reporting Review Group of FRRB of ICAI for the year 20 to 21, and India's IFRS Implementation Committee for the year 14 to 15, and Insurance and Pension for the year 2014 to 15 of NIRC of ICAI. He is also the faculty resource of Peer Review Board of ICAI. Besides being a regular guest speaker of IFRS and management development programs at various forums, including ICAI and ICSI, he is also an author of over dozens of books and commentaries on and including IFRS and India's Concepts and Applications, COVID-19 Guide to Financial Reporting and Audit, COVID-19 Guide for Business and Professions, Concise Commentary on Companies Act, Companies Resolutions, Notices, Meetings and Minutes, Borrowings, Loans and Investments by the Companies Law, Law, Accounting and Taxation, NFRA, Law and Practice, Ind AS, a Ready Reckoner, Standards on Auditing, a Practitioner's Guide, Concise Commentary on Insolvency and Bankruptcy Code 2016, series of books on Companies Act 2013, Corporate Social Responsibility, a separate book on corporate social responsibility, Guide to Tax Audit under Section 44AB, CARO 2016 and 2020, Foreign Direct Investment in India, Auditor's Practice Manual, Handbook on Company's Balance Sheet and Profit and Loss Account under Schedule 3, Handbook on Internal Auditing, Consolidated Financial Statements, Interim Financial Reporting, Guide to International Taxation, Understanding GST, Corporate and Allied Laws, including Insolvency and Bankruptcy Code, Insolvency and Bankruptcy Code, a Ready Reckoner, Professional Approach to Advanced Accounting for CA Final Studies, and Systematic Approach to Auditing for CA IPCC, published by leading publishing houses, Walters Clover and Bharat Law House Private Limited. He has to his credit the contribution of Gist of Accounting Standards and Auditing and Assurance Standards for Volume 2 of Company Law, published by BLH, and various articles for NIRC and CIRC of ICAI newsletter on FBT, MAT, US SOX, CARO, FEMA, etc., and a series of articles on Delhi Value Added Tax, taxation, accounting and auditing aspects for the Journal Tax and Corporate Reference, including various articles on external commercial borrowings, direct taxes, and foreign investments for TCR. He possesses a rich industry experience in the area of corporate laws like Companies Act, FEMA, taxation, foreign collaborations, joint ventures, etc. Audits and management consultancy. With these few words, it's a great pleasure to introduce the speaker of this seminar, CA Kamal. As the chairman of CSR committee of the SIRC of ICAI, it's a great pleasure. I should say the CSR program, as a chairman of CSR committee, let us all be aware of the provisions of CSR under Companies Act and make our clients aware of those provisions and take our own responsibilities with regard to CSR and also encourage our clients to do more CSR activities. The clients are also ready to do CSR activities and let us guide them in a proper way so that the provisions are also complied by the clients. At the same time, many of the people in need are getting benefited. So it's a great pleasure as chairman of CSR committee. Sir, it's a great honor for me as a chairman to have you here to speak on CSR. So thank you for accepting our invitation, sir. And it's always wonderful to hear from you. And the same way, today I'm waiting to hear you again. Thank you, sir. Over to you, sir.
Thank you, Rajeshji. And it is really wonderful to have this evening on Sunday with academic inputs and outputs, and especially the listening of few words of introduction from your mouth. So if you say few, I am humbled. Thankfully, it is few. And it is really an honor to address this gathering today. And Rajeshji is a very good friend. And I must say he is one of my younger brother as well as elder brother from another mother. So I will start my topic of CSR. But before I delve upon this topic of CSR, I need to know from the audience certain questions. I will try to make the session interactive and try to be responsive of my questions. My question number one is, how many of you people know as to whether CSR is having any interplay with accounting standards or Indian accounting standards, as the case may be? Most of the chartered accountants or auditors, what they are into, they do believe that CSR as of now is confined only to CSR spending, is confined only to disclosures under Schedule 3, which was recently amended, or is confined to reportability aspect in CARO 2020. CARO stands for Companies Audit Report Order. So these are the things which people are discussing. I will also discuss these things, but more than that, I will also discuss the things which people are not discussing. One of the elements which is not having any limelight is, are you aware or not whether accounting standards or Ind AS are having implications on CSR? Any idea? I will take 2 minutes to discuss this scenario. First of all, how many of you know that accounting standards or Ind AS also have the implications vis-a-vis CSR? Similarly, most of the people who are listening to me may be the auditors. Can you please tell me what are the prominent, I will not say all, what are the prominent auditing standards? What are the prominent auditing standards that are having professional considerations vis-a-vis CSR? Any idea? Can I have any answers? Rajesh, can you see if any answer is there in the chat box? Implications of AS or Ind AS or implications of standards on auditing vis-a-vis CSR? Out of my experience, what I observed, most of the chartered accountants are saying, can we have the format of CSR reporting? See, format is okay. Format can be made available on Google also. But the fact is, are we able to comply with provisions in letter and spirit or not? So I will share my screen and I will discuss some practical problems also, some questions also. Please try to be responsive of those questions. And I would suggest each one of you to keep on writing some of the main points, because most of the points are not in PPT. Most of the points I will be delivering orally. So I'm sharing my screen. Just give me one confirmation once my screen is visible to you. Rajesh, are you able to see my screen?
Yes, sir.
So this is the topic given to me, CSR and auditor's responsibilities. And as you know, the words used are auditor's responsibilities. So the discussion will be engrossing you in accounting standards, Ind AS, as well as auditing standards. So my suggestion would be, please keep on noting some of the critical points. As a matter of ice breaking, let us start with this small introduction. To whom the CSR is applicable? So I will read it, then I will give the commentary part. We do have section number 135, subsection 1. Section 135, subsection 1 of Companies Act says CSR is applicable to every company. Now the words used are every company. So it means it will include public companies, private companies, foreign companies, government companies, etc., etc. Provided such company or companies fulfill any of the following three conditions, during immediately preceding financial year. If you focus, the word used is or. The word used is or. That means if out of these three conditions, any of the condition is fulfilled, in the immediately preceding financial year, then CSR would be applicable in the current financial year. I will take a case study on it in a short while. The first condition is net worth shall be more than equal to rupees 500 crores, or turnover shall be more than equal to rupees 1000 crores, or net profit shall be greater than equal to rupees 5 crores. So if any of these three conditions is fulfilled in the immediately preceding financial year, then CSR provisions will be applicable. Now, when we say that CSR provisions are applicable, the question arises, what are the obligations that will be applicable once any of these three conditions are fulfilled? There are two obligations. I repeat, there are two prime obligations. Once you are covered by any of these three conditions, then you would be required to comply with two prime obligations. Please focus on my word prime. I'm not saying that other obligations are not there. Other obligations are there, but two prime obligations are there. Two superlative obligations are there. Obligation number one is CSR spending. Focus upon the word spend, because for this spend, I will be discussing a case study with you. Like the case study would be whether we can make CSR spending in non-cash mode or not. Can we make CSR spending in kind or not? We'll discuss in detail about that aspect. So first prime obligation is CSR spending. Now what the law says, if you are covered, your company is covered by CSR provisions, then minimum or at least 2% of last 3 years average net profits shall be spent on such activities as are enshrined in Schedule 7. So Schedule 7 has given a list of CSR activities. So if you are falling into CSR provisions, then at least 2% of last 3 years average profits need to be spent on such activities which are enlisted in Schedule number 7. Now there could be a scenario that a company is a newly incorporated company and it has not completed 3 full years. In such a case, the law was amended and the amendment stated or less than 3 preceding years for newly incorporated companies. So meaning thereby, if a company is newly incorporated and it has completed say only 1.5 years, in such a case the average would be computed for 1.5 years. Second prime obligation is constitution of CSR committee. Now if the company is covered by any of these three parameters or these three thresholds, then such company is also required to constitute CSR committee, and in this CSR committee minimum 3 directors must be there. Out of these 3 directors, one shall be independent director. However, if there is no need for such a company to appoint independent director, then independent director is not required to be there in CSR committee. So like if you are a private company, in private companies there is no need to appoint independent director. In such a case, the CSR committee can be constituted without any independent director, with a caveat. In private company, minimum 2 directors are required in the CSR committee. And if it is a foreign company, 2 persons are required. Who will be these 2 persons? One is the authorized person, second is the nominee person. So like Microsoft Networks USA. Microsoft Networks USA is having one company in India, like for example Microsoft Networks India. Now if Microsoft Networks India is required to spend CSR funds, in such a case the CSR committee of Microsoft Networks India will be having one authorized representative like Sri Rajesh ji, and second would be nominee, like Bill Gates, as may be nominated by such very foreign company. This is what a simpler scenario is. Now let me ask you certain questions. Please try to respond these questions. I'm putting the question on screen. Let us assume the company is RST Limited. In the financial year 2021, this is the data. Let me show you this limit once again. So I'm putting here. So say, for example, net worth here is rupees 300 crores. Turnover here is, say, rupees 800 crores, and net profit, say, is rupees 1.5 crores. Now I have a question for you. The question is whether Ind AS is applicable on RST Limited, whether CSR provisions are applicable on RST Limited for financial year 2020-21. Sorry. Yes, any answer? Rajesh, can you please pass on the answers?
We are checking, sir. There is any.
Or if the audience wish, audience can even unmute themselves.
Oh, yeah, audience
and
also given the option to unmute and respond, sir. Yeah. They can.
So first question is whether Ind AS is applicable on RST Limited or not. With the given data, Ind AS are applicable. Ind AS are applicable, yes. Why? Because net worth is more than rupees 250 crores. But whether CSR is applicable?
It says not applicable from Hanmad loop.
No, because none of the threshold is fulfilled. So from this question, what I'm trying to convey, you can take a screenshot of this question and you can take a note of one sentence also. Some of the chartered accountants are under a misconception. The misconception is if a company is covered by Ind AS applicability, then CSR automatically becomes applicable upon it. This is a misconception only. If you see this example, on RST Limited, Ind AS are applicable undoubtedly because net worth is more than rupees 250 crores. But despite Ind AS being applicable on RST Limited for the financial year 21-22, still CSR is not applicable because net worth is less than rupees 500 crores, turnover is less than rupees 1000 crores, and net profit is less than rupees 5 crores. So what is the moral of story? The moral of story is simply because Ind AS are applicable on a company, CSR automatically does not become applicable on such company. I believe this question is clear to each one of you. So I have seen certain auditors, they are qualifying the report, and when they qualify the report, they say the company is covered by Ind AS, but still it is not making any CSR spending. Please understand, the threshold for Ind AS applicability are different from the thresholds given for CSR applicability. So if you wish, you can take a screenshot of this very illustration for the sake of your records. The moral of story, I must repeat once again, simply because Ind AS are applicable on a company, CSR automatically does not become applicable on such company. Now let me go back to thresholds once again. There are three thresholds: net worth, turnover, and net profit. Now keep these thresholds in mind and please try to answer these questions. So these questions which I'm going to ask you are pertaining to accounting and auditing aspects. Here are 7 questions for you, which we will try to explore. Question number 1, whether P&L, debit or credit balance is included to compute net worth. Question number 2, whether general reserves are always included to compute net worth. Number 3, if CSR is applicable on a parent company, whether it is automatically applicable on its subsidiary company. Number 4, whether one financial year could be for more than 12 months. Number 5, whether CSR once applicable always remains applicable. Number 6, whether CSR needs any reporting under CARO 2020, and this CARO 2020 is applicable for FY 21-22. So this question assumes special significance. And last question is how to disclose CSR expenditure to comply with Schedule 3 requirements. You know very well, Schedule 3 was also amended, and under revised Schedule 3, certain new elements are incorporated vis-a-vis CSR disclosures. So let us understand each one of the questions in interactive mode. So first one is whether P&L, debit or credit balance is includable for the purpose of computation net worth. Any answer from your side? Yes, any answer? So let us try to have the understanding. You can take a note of this thing. The expression net worth is defined in Companies Act, and it is defined by section number 2, clause number 57. I repeat, section number 2, clause number 57. Section number 2, clause 57, which you can see on the screen, it says that net worth means the aggregate value of paid up share capital. The aggregate value of paid up share capital. Just give me a moment. The aggregate value of paid up share capital and all reserves created out of profits, security stream account, and debit or credit balance of profit and loss account after deducting the aggregate value of accumulated losses, deferred expenditure, and miscellaneous expenditure not written off as per audited balance sheet, but does not include reserves created out of revaluation of assets, write back of depreciation and amalgamation. Now, if you see this definition, directly it is writing and debit or credit balance of profit and loss account. It means that if I go back to my previous question, the question was whether P&L, debit or credit balance is includable for the purpose of computing net worth. Answer is yes. So P&L debit balance or credit balance, as the case may be, shall be considered for the purpose of computation of net worth. Question number 1 resolved. Now question number 2 is whether general reserves are always included to compute net worth. Let us take an example. Now I am sharing an example with you. Please try to explain whether this will be includable in net worth computation or not. Say for example, the company was having debenture redemption reserve. Now when this debenture redemption reserve was there, after few years, the debentures were redeemed and the balance in debenture redemption reserve was transferred to general reserves. Now the question is whether such general reserve will be included in net worth. Yes or no? Any answer? Whether such general reserve will be included in net worth or not?
It says yes, sir, from one of our participants.
So if the answer is yes, then the answer could go wrong. Because if you see, the words used are reserves created out of profits. So each time the general reserve is not created out of profits, so only those reserves will travel into computation net worth which are created out of profits. So please take a note of this point, that mistakenly we may compute net worth in a wrong way. Only those reserves will travel into net worth which are created out of profits. So those reserves which are created out of DRR are not the reserves which are created out of profits, and hence it will not be included. Like other example could be sinking fund, other example could be revaluation reserves which are traveling into general reserves at the time of disposal of property, plant and equipment. So please make a mark over here. The mark is you will include only those reserves which originally were created out of profits. Other than that, no reserve will travel into net worth computation. And this is what important point is for the purpose of computation of net worth. Number third question. If CSR is applicable on parent company, whether it is automatically applicable on subsidiary company? What is your take on to it? So let us understand this thing. We have section number 135.1, and section 135.1 begins with the words every company. So the evaluation as to CSR applicability, evaluation as to CSR applicability is company specific. Can you please mute yourself? Some of the participants' mic is on, I believe.
Yes, I muted them. Sir. Muted them.
So we do have section number 135 of section 1. It uses the words every company. So what you need to understand, whether CSR is applicable or not, needs to be evaluated in a company specific manner rather than group specific manner. So holding company is separate, subsidiary company is separate, and hence if CSR is applicable on holding company, by default it will not be applicable to subsidiary company unless and until the subsidiary company on its own standalone basis fulfills any of the thresholds given by section number 135 of section number 1. I have a small question over here. Let us take a situation and please try to respond back. This question is in relation to consolidation of financial statements. So I'm putting a question over here and try to respond back without searching on Google. Let us take some kind of hypothetical situation. We have Wipro Limited and CSR is applicable on it. Wipro Limited is having its wholly owned subsidiary, namely Azim Premji Foundation, and it is a Section 8 company. Now what Wipro does, Wipro undertakes CSR activities through Azim Premji Foundation Section 8 company. Now we have few questions for you. Question number 1, whether Wipro Limited and Azim Premji Foundation Section 8 company are related parties. Question number 2, whether Wipro Limited needs to consolidate the financial statements of its wholly owned subsidiary, that is Azim Premji Foundation Section 8 company. Yes, any answers? Any answer? And let me put one more question for you along with that, whether Azim Premji Foundation Section 8 company is having, or let me put like this, whether CSR activities, or I should say CSR spending through Azim Premji Foundation Section 8 company is having any implication on the notes to accounts, and audit report of Wipro Limited. Yes, any answer, please? So WOS here is a wholly owned subsidiary. Question number 1 is whether Wipro Limited and Ajim Premji Foundation are parties related. Any answer? So you can note the answer. The answer is yes. How they are related? They are related by virtue of holding and subsidiary company. Question number 2 is whether Wipro Limited needs to consolidate the financial statements of its wholly owned subsidiary Ajim Premji Foundation. Answer is no. Why? Because as per AS 21 or Ind AS 110, those subsidiaries are not consolidated which cannot transfer or distribute profits amongst its members. And you know very well, Section 8 states that such companies cannot distribute dividends. So, meaning thereby, Ajim Premji Foundation, Section 8 company, I agree, it is a wholly owned subsidiary Wipro Limited. But by virtue of Section 8, Ajim Premji Foundation cannot distribute dividends. And hence, the ability of Ajim Premji Foundation to transfer funds to Wipro Limited is adversely affected, and hence there will be no consolidation. So on one hand, Wipro Limited and Ajim Premji Foundation are parties related, and the relationship of holding and subsidiary company is there. Despite the relationship of being holding or subsidiary company, there will be no consolidation at all. Why? Because AS 21 or Ind AS 110 prohibits such kind of consolidation. Now, third question is whether CSR spending through Ajim Premji Foundation is having any implication on notes to accounts and audit report of Wipro Limited. Answer is yes. What is the implication? If I put the implication here, just give me a moment. If I put the implications here, the implication would be implication number 1, AS 18 or Ind AS 24 disclosures regarding related party transactions. If you come to Caro, in Caro we have Caro 2020 as of now. In this para number 3, subpara number 13, reporting about RPT compliance. So you can take a note of this thing. Meaning thereby, you know very well, by virtue of CSR rules, which were amended on 22nd January 2021, it is now being allowed that a company can undertake CSR activities either directly itself or through some implementing agencies. Now, these implementing agencies could be the subsidiaries or trusts or societies established by the company itself. In such a case, if such kind of implementing agencies are there, it will be deemed as party related for the donor company, and hence the disclosures in notes to accounts as well as reporting in CARA 2020 shall be required. I believe this point is clear to each one of you. Now, this question is resolved. That means this question number 3 is resolved. Now come to question number 4, whether one financial year could be for more than 12 months. Any answer? Can one financial year be for more than 12 months? Answer is yes. If a company is incorporated on or after 1st January, in such a case, the financial year could be for more than 12 months. And for this purpose, we need to refer to the definition of financial year given by section number 2, clause number 41. Section number 2, clause 41 says, financial year in relation to any company or body corporate means the period ending on 31st day of March every year. So this is a normal one. However, where it has been incorporated, that means when the company is incorporated on or after 1st day of January of a year, the period ending on 31st day of March of the following year, in respect whereof financial statement of the company or body corporate is made up. So say for example, the company is incorporated on 1st January 2021. In such a case, the financial year for such company will be from 1st January 21 till 31st March 2022. That means 31st day of March of the following year. Now, why this question assumes significance? The question assumes significance for the reason that if you refer section 155, it says that CSR spending shall be at least 2% of last 3 years average profits or less than 3 preceding years. Now, these less than 3 preceding years may be 1.5 years also, na? Like in my example, the company was incorporated on 1st January 2021. So 15 months will be considered as 1 year. So average would be computed for that very period itself. So what you need to remember, the financial year could be for more than 12 months also, especially for newly incorporated companies. So question number 4 also is resolved now. Question number 5, whether CSR once applicable always remains applicable. Is it right? Like if you are covered by CSR once, will always be covered by CSR. Is it right? Answer is no. The law says something different. So the agenda of discussion now is whether CSR once applicable always remains applicable. Answer is no. Section 135 says every company which ceases to be a company covered under subsection 1, that means those 3 thresholds. So if you are ceased to be covered by any of those 3 thresholds for 3 consecutive financial years, then your company will not be required to constitute a CSR committee and to comply with the provisions contained in subsection 2 to 6 of the said section. Now, what are these sections? Section 135(2) deals with the disclosure of CSR committee constitution in the board report. Subsection 3 deals with the role of CSR committee. Subsection 4 deals with the role of the board and placing of CSR policy on company's website, if any. Subsection 5 deals with the minimum CSR spending, that is at 2%. And subsection 6 deals with unspent CSR account. I will discuss this separately. Meaning thereby, for 3 consecutive financial years, for 3 continuous financial years, you should remain outside. You should remain outside the thresholds given by the law. If you are not covered by those thresholds for 3 continuous financial years, then you will be totally outside CSR purview. So if you go back to these thresholds once again, these are the thresholds. Let me copy these thresholds. And now let me explain this scenario. So the thresholds are like this. Now, let us assume this threshold is for FY 2021, sorry, 2020. So now what will happen here? By this virtue, what will happen? CSR is applicable for FY 21-22. That is the basic scenario. Now, what happened? Just see. Let me show in the next clip. Now, in the financial year 21-22, just see what happened. In the financial year 21-22, net worth was, say, rupees 480 crores. Turnover, let us say, was rupees 980 crores. Net profit, say, was rupees 4.5 crores. Question: whether CSR is applicable for financial year 22-23? Yes or no? Answer is yes. Now, having said that, just give me a moment. This is scenario number 1. Now, if I proceed further, now we have financial year 22-23. Here what happened? Net worth was rupees 470 crores. Turnover, let us say, was 950 crores. And net profit was rupees 4 crores. Question arises whether CSR is applicable or not for the year 23-24. Sorry, for the year 23-24. Answer is yes. Now one more scenario. For 23-24, net worth is, let us assume, rupees 460 crores. This is rupees 940 crores. And say this is rupees 3.9 crores. Question arises whether CSR is applicable for the financial year 24-25. Answer is yes. Now, having said that, one more scenario. Now the scenario is like that. Give me a moment to make some adjustments. The scenario is, here we have financial year 24-25. Now let us assume the net worth became 501 crores. Balance thing is say like this. Now the question arises whether CSR is applicable or not for financial year 25-26. Yes or no? You have to check these two questions. So I'm highlighting this thing in yellow, and please respond back. Yes, any answer? Yes, any answer whether CSR is applicable or not in financial year 24-25 and 25-26? Any answer?
Unmute in the mobile phone, sir.
So see what happened. This will be your year one. In year one, thresholds are not fulfilled. Now let us check for year two. Year two, thresholds are again not fulfilled. Now question arises, what about 23-24? Year three, thresholds are again not fulfilled. So in this very case, what will happen? The correct answer will be CSR is not applicable. Because for three continuous years, you were outside the thresholds, so CSR is not applicable. Now what happened in the next year? In the next year, 24-25, the limits again were breached. So what will happen from the next year? That means from year 25-26, CSR again will become applicable. So what is the motive of this discussion? When we say 3 consecutive financial years, so these 3 consecutive financial years shall be based upon my preceding years on each year by year basis, because the law was saying during immediately preceding financial years you may or may not fulfill these given thresholds. So when you need to assess 3 consecutive financial years, these 3 consecutive financial years shall be based upon my preceding financial years for each of the 3 years. I believe I made the point and it is clear. So 3 continuous financial year is the core. Now let me proceed further. The word used here is turnover. Can you please tell me what is the meaning of turnover here? How to define turnover? Any answer? What is turnover? So you can take a note of this thing. The word turnover is defined under section 2 clause 91. Now what does it say? Sorry, it says that turnover means revenue from sale of goods or rendering of services as recognized in the financial statements for the year. Now what are the words used? The words used are revenue recognized. So the word turnover is referring to the word revenue, and then it is being followed by the word recognized. It means that as a layman, what we can say, it means that revenue recognized as per AS 9 or Ind AS 115, as the case may be, shall be considered as turnover. So what we need to be focused about is turnover is almost equal to your revenue, which is being booked by AS 9 or Ind AS 115, as the case may be. So some people have a confusion that turnover is different from the word revenue. It is not so. Turnover and revenue both are same. I repeat, turnover and revenue both are same. And what is revenue? Revenue means the amount recognized as revenue in accordance with accounting standard 9 or Ind AS 115, as the case may be. Then the word is net profit. What is the meaning of net profit? The law says, that means section 135 says, net profit means the profits as computed in accordance with section 198 of the Companies Act. So whatever profit your P&L is depicting may not be the correct profit for the purpose of CSR. But you need to understand the precaution is profit as per P&L is not the net profit envisaged by section 135. The correct profit is as computed under section number 198. So in my experience, what I have seen is most of the chartered accountants are taking net profit as per P&L for the purpose of CSR spending. It is wrong practice. The correct practice is you have to recompute the profit in accordance with section number 198 of the Companies Act. Now some people may also have a kind of invalid argument. The invalid argument is people say that section number 197 and section number 198 are not applicable to private companies. Please listen this paragraph carefully. Some people have a contention. The contention is that section number 198 and section number 198 are not applicable to private company because these two sections themselves are not applicable to private company. In such a case, while we compute profit for the purpose of section 135, we can take profit as per P&L. No, you cannot. For the limited purpose of section 135, irrespective of whether your company is a public company or private company, you have to compute profit in accordance with section number 198 only. I repeat, you have to compute profits in accordance with section number 198 only. You cannot take the profit as such being given by P&L, irrespective of whether you are public company or private company, as the case may be. So please take this precaution. The precaution is never take profit as given by statement of P&L. You have to derive the profit. You have to recompute the profit in the manner given by section number 198. It is immaterial whether a private company or a public company, because section 198 is used for the purpose of section 135 in a limited way. Nowhere we are referring managerial remuneration. We are computing profit here only for the purpose of CSR computations. Having said that, please answer these questions. Question number 1, let us assume the company is Veggie Noodles Limited. It is having a net worth of rupees 600 crores for past few years. Whether distribution of its own manufactured noodle packets in drought hit areas in India can be treated as CSR spending. So the company is Veggie Noodles Limited. What happened? it is having the net worth of rupees 600 crores in the preceding financial year, and that's why CSR became applicable upon it. Now, this company being covered by CSR, what it did, there were certain areas in India which were drought hit, and there was a scarcity of food. So this company distributed noodle packets in those areas. These noodle packets were manufactured by the company itself. Question arises, whatever noodle packets were distributed by Veggie Noodles Limited, can it be considered as CSR spending for the company or not? Question number one. Question number second, Veggie Noodles India Limited has proposed to contribute ₹1 per piece of its product sale towards the education of girl child. Whether such proposal signifies compliance of CSR spending requirements. Like you must be aware, several companies are having this kind of practice. They will say for each packet being sold, ₹1 will be contributed to the education of girl child or to the upliftment of the poor people and so on. Whether this kind of scenario can be taken as CSR spending compliance. And question number third, CSR spending was made out of the borrowed funds by the company, since it was having huge accrued and earned profits but negligible cash profits. So company was having huge accruals of profits, but the company was not having cash profits. And because the law says if your net profit is more than ₹5 crores, you have to make CSR spending. The company was having profits, but company was not having proper liquidity. So company borrowed funds and then did the CSR spending. Can it be done? Whether it will result in any kind of contravention or so on. So what about question number one? Can CSR spending be made in kind? Any answer? Rajesh ji, any answer from your side? No answers? Okay, let us take this one. This is one of the conflicting area nowadays. Ministry of Corporate Affairs issued some FAQs way back in August 2021. To be precise, it was 25th August 2021. On 25th August 2021, certain frequently asked questions were issued by Ministry of Corporate Affairs, and it added the confusion to the market. So if you refer FAQ 3.12, the FAQ 3.12 reads as follows: whether contribution in kind can be monetized to be shown as CSR expenditure. So the theme of the question was whether non-cash spending is as good as CSR expenditure. For this purpose, what the ministry replied, what the ministry answered, the requirement comes from section 135(5) that states that board of every company shall ensure that it spends. Therefore, CSR contribution cannot be in kind and monetized. So what is happening? Ministry of Corporate Affairs has given an answer in question 3.12, whereby it has categorically answered that CSR contribution cannot be in kind. So meaning thereby, according to this FAQ 3.12, spend means spending in cash. So prima facie it appears that debiting the P&L account with the value of contribution made in kind is not CSR activity. Therefore, if a company contributes or donates, say, laptops, books, etc. to education institutions, such contributions won't be considered as CSR. This is what the interpretation is coming out from FAQ issued by MCA. But in my personal humble opinion, I don't endorse this very answer of MCA. It's my personal opinion, although with due regards to ministry's clarification, my personal opinion goes against this FAQ. The reason is quite obvious. Ministry of Corporate Affairs has given an affidavit. Ministry of Corporate Affairs has given an affidavit, has submitted an affidavit in Delhi High Court on 17th April 2014. And the affidavit was given in context of Muhammad Ahmed Minor versus Union of India case. In Muhammad Ahmed Minor versus Union of India case, the affidavit which was submitted by MCA reads as follows. So I am giving the quotation of para 77 and para 78 of that affidavit. Now what it says, oh sorry, not of that affidavit, of that case law. So in that case, Muhammad Ahmed Minor versus Union of India, para 77 and para 78, repeated the content of affidavit given by MCA, and just see the contents which are written on the screen. On 28th March 2014, the Ministry of Corporate Affairs filed an affidavit clarifying the scope of term normal course of business used in Rule 4 and 6 of CSR rules by giving the following example. A pharmaceutical company donating medicines, drugs within Section 135, read with Schedule 7 to the Act is a CSR activity, as the same is not an activity undertaken in pursuance of its normal course of business, which is relatable to healthcare or any other entry in Schedule 7. This affidavit clarifies that an activity carried out by the company covered under Schedule 7, which is a part of its core business, if not done with a profit motive, amounts to CSR activity. Therefore, said letter and affidavit of MCA are taken on record and accepted by this court. Government of India is held bound by the same. My humble submission to all the chartered accountants, specifically the auditors, we're going to issue the first audit report on CSR under CARA 2020. I must say, if the company has taken a stand that it will be doing CSR spending in non-cash mode, in that very sense, please document the reasons of that stand in your working papers and report appropriately under para 3 subpara 20 of CARO. And for this purpose, what is the auditing standard applicable? The applicable auditing standard will be SA number 250. Are you getting my point? So non-cash spending towards CSR is allowed because law is not prohibiting, and as far as MCA FAQs are concerned, FAQs are not binding. FAQs are not binding, they're merely the clarifications. So if the company has taken a stand of making non-cash spending on CSR, you may take that stand, provided you document the things in your working papers in accordance with the requirements of SA number 250. SA number 250 stands for consideration of laws and regulations in audit of financial statements. Now, if I come back to the other question, so what is the resolution here? The resolution for question number 1 is, can be done in kind mode. What is the reference? MCA affidavit filed in Delhi High Court. Now, second question is, Veggie Noodles India Limited has proposed to contribute ₹1 per piece of its product sale towards the education of girl child. Whether such proposal signifies compliance of CSR spending requirements? Please understand, the answer is no. It is not resulting in actual CSR spending because it is merely a CSR policy. So simply because you have devised a CSR policy, it will not help you. Along with the policy, you must have the habit of spending on CSR activities. Question number 3. The company was not having proper liquidity, but profit parameters were there. So question arises, because company was facing liquidity crunch, it borrowed funds and made CSR spending. Is it proper way? Answer is yes. Legally, it is fine. Legally, there is no problem. But there is a question. Question is rather not the question, I should say, there is a precaution. The precaution is for auditors. Now, what is the precaution for auditors? Let me highlight it. Or can you please tell me what is the precaution for auditors here? What could be the precaution for auditors if this kind of thing happens? The precaution is auditors need to evaluate material uncertainty to pay off the liabilities by the company as required to be reported under para 3 subpara 19 of CARO 2020. This para 319 deals with going concern reporting, material uncertainty reporting. If you try to recollect, in CARO, para number 319 says, on the basis of financial ratios and other information available with the auditor, auditors need to report whether company would be able to pay off the liabilities within 1 year of the financial year. So that material uncertainty needs to be reported, and it is quite obvious now, if the company is making CSR spending from the loans being taken by it, it may lead to some kind of material uncertainty vis-a-vis paying off the liabilities. So I believe these 3 questions are clear to each one of you. You can take a screenshot of this whole scenario because solutions are typewritten over here. Specifically, I would like to emphasize question number 3rd, because most of the companies might be making CSR spending because of the monetary thresholds, but still it may be having liquidity crisis. So please be very focused to make the reporting of the same, if any, in para number 3, subpara number 19 of CARO 2020. I believe this point is clear to each one of you. So let us move forward with some further discussions. Now let us come to Schedule 3 requirements. So now in Schedule 3, we have 2 set of requirements. I repeat, in Schedule 3, we have 2 set of requirements. One is the requirement of debiting CSR expenditure, and second is the disclosure about CSR expenditure. So now we have guidance note on Schedule 3. Guidance note on Schedule 3 says that whatever CSR spending is made, you have to disclose CSR expenditure. So whatever CSR expenditure is being debited to P&L. So in P&L debit side, you must be having CSR expenditure. For that CSR expenditure, you have to disclose the CSR expenditure in this manner. What is the manner? Point number 1, gross amount required to be spent by company during the year. And point number 2, amount spent during the year on construction or acquisition of any asset or purpose other than above, whether the amount was spent in cash or yet to be paid in cash. So this is known as disclosure about CSR expenditure debited in P&L. So whatever expenditure you are debiting in P&L shall be disclosed in this manner, which is visible to you on the screen. Now Schedule 3 was amended. In addition to whatever disclosure you are observing on the screen, some more disclosure requirements are inculcated after amendment of Schedule 3. So whatever you are able to see on screen, it is a disclosure number 1. Now disclosure number 2. Disclosure number 2 is, if you see, prior to amendment there was no such requirement, but post amendment this is the requirement. Para number 5, subpara number 10 of Schedule 3. Now what are the additional disclosure requirements? The Schedule 3 says, after amendment, where the company is covered under section 135 of the Companies Act, the following shall be disclosed with regard to CSR activities. Number 1, amount required to be spent by the company during the year, amount of expenditure incurred, shortfall at the end of year, total of previous year shortfall, reason for shortfall, nature of CSR activities, details of RPT, for example, contribution to a trust controlled by the company in relation to CSR expenditure as per relevant AS. We already did a question of Wipro Limited and Ajim Premji Foundation. So in clause number G, that detail will come, that Wipro Limited has contributed CSR amount to Ajim Premji Foundation. And number H, where a provision is made with respect to liability incurred by entering into contractual obligation, the movements in the provision during the year should be shown separately. So on 31st March 2022, you committed to make some spending on CSR. You created a provision there too. Whatever provision is created, next year you will make a spending out of that provision. So provision will be reduced. So opening balance of provision minus amount spent is equal to closing balance of provision, is known as movement. So that movement in provision shall be shown separately. This is the requirement which is envisaged by Schedule 3 after the amendment. So let me emphasize once again, at present CSR is required to be disclosed at 2 stances. One is the stance about CSR expenditure. One is stance about CSR expenditure debited in P&L. And second is descriptive disclosures about such CSR expenditure. So this is nothing but summarized disclosure. This is known as descriptive disclosure, and this is the amendment of Schedule 3. Having said that, let us discuss one more element, what CARO says. Just give me a moment to discuss CARO. Now just see what CARO states now. CARO 2020 is having 2 paragraphs which are relevant for us, or I should say 2 paragraphs, and second paragraph is having 2 subparagraphs. Paragraph number 3, subparagraph number 13. I already discussed, but let me re-emphasize. Paragraph number 3, subpara 13 says auditors have to report whether all transactions with the parties related are in compliance with sections 177 and 188 of Companies Act where applicable, and the details have been disclosed in the financial statements as required by the applicable accounting standards. So this para number 3, subpara number 13, we already covered in the example of Ajim Premji Foundation. Just see on the screen. See the last question. Let me highlight it. See this example. This we already covered. So this is what we have to report under paragraph number 3, paragraph number 13. So now one is disclosures and reporting about RPT vis-a-vis CSR. The second is the new reporting requirement, which was not there in CARA 2016, but is now there in CARA 2020. Paragraph number 3, subparagraph number 20. It is having two subparagraphs. One reporting requirement is auditors have to report whether in respect of other than ongoing projects. Now, what are other than ongoing projects and ongoing projects? We'll get to know in some moments. Whether in respect of other than ongoing projects, the company has transferred unspent amount to a fund specified in Schedule 7 to the Companies Act within a period of 6 months of the expiry of financial year in compliance with second proviso to subsection 5 of section 135 of the said act. Don't worry, I will discuss in detail what this subsection 5 is. Para number B is whether any amount remaining unspent under subsection 5 of section 135 of the Companies Act pursuant to any ongoing project. So this is about other than ongoing project. This is about any ongoing project has been transferred to special account in compliance with the provision of subsection 6 of section 135 of the said act. So let us understand what these provisions are. Automatically this para 320 will be covered. So the paragraphs, the section 135 5-6 says, number 1, amount remaining unspent pursuant to any ongoing project. This is what subsection 6 says. Now what is ongoing project? I will tell you in some moments. So case number 1, if the project, that is CSR project, if the CSR project is ongoing in nature and the amount is remaining unspent vis-a-vis ongoing project, the law says such unspent amount shall be transferred by the company within a period of 30 days from the end of financial year to a special account to be opened by the company in that behalf for that financial year in any scheduled bank to be called as unspent CSR account. So in a scheduled bank like Punjab National Bank, you have to open unspent CSR account, and in such unspent CSR account you have to transfer the amount which remained unspent vis-a-vis ongoing project. Such amount shall be spent by the company in pursuance of its obligation towards the CSR within period of 3 financial years from the date of such transfer. So like if the financial year is 21-22, 3 years will be counted and the 3 years will end on 31st March 25. If the financial year is 2021, it will end on 31st March 2024, 3 years. So this is with respect to ongoing project. Now, if the company fails in spending within such 3 financial years, then the company shall transfer the same to a fund specified in Schedule 7 within a period of 30 days from the date of completion of 3rd financial year. So this fund could be like PM Care Fund. So if you are not able to spend this amount, that is this highlighted point, if you are not able to spend this amount, whatever amount henceforward remains unspent shall be transferred to a fund. Fund could be, for example, PM Care Fund. Now, what about other than ongoing project? So if there is the unspent amount vis-a-vis other than ongoing project, it shall be transferred by the company to a fund specified in Schedule 7, again like PM Care Fund, within a period of 6 months of the expiry of financial year. For example, 31st March 2021 for the financial year 2021, 31st September 2022 for financial year 21-22. Now, having said that, let us understand what is ongoing project. So CSR rule says ongoing project means a multi-year project undertaken by a company in fulfillment of its CSR obligation, having timelines not exceeding 3 years, excluding the financial year in which it was commenced, and shall include such project that was initially not approved as multi-year project, but whose duration has been extended beyond 1 year by the board. Board here means the board of directors based on reasonable justification. So If a project is having the tenure of more than equal to 1 year, but less than equal to, or I should say, if the project is having tenure of more than 1 year, but up to 3 years, then it will be considered as a ongoing project. It will exclude the year in which the project was commenced. So effectively 4 years are there. Let me take an example to make people understand. Say the company is RST Limited. The financial year is 21-22. CSR spending as planned, say, is rupees 10 crores. CSR project for such spending, say, is construction of hospital, which will take 2 years to get completed by, say, 31st March 2023. As on 31st March 2022, only rupees 2 crores were spent by RST Limited. Hence, unspent amount is equal to rupees 8 crores. Question is how to deal with such unspent amount. Yes, any answer? Rajesh ji, any answer? How to deal with such unspent amount? So first is the project is ongoing in nature. Number second, unspent amount of rupees 8 crores. Sorry for the spelling mistakes. Unspent amount of rupees 8 crores. How to deal with it? Shall be transferred to, just see the provisions once again. Pursuant to any ongoing project shall be transferred within a period of 30 days to unspent CSR account. So meaning thereby shall be transferred to unspent CSR account with a scheduled bank. And by which date you have to open this account, or I should say transfer.
So screen not visible. Okay, fine. Now it's visible. Yes, sir. Yes, sir. It's visible.
Okay. Transfer this amount by 30 days. May we have to spend now. So 30 days means transfer this by 30th April 2022. What else? Come to Caro 2020 para 3 sub para 20. Auditors to report whether point 2 above is complied or not. I believe this illustration is clear to each one of you. You can take a screenshot of this one. Now, if I put one more illustration, the company is RST Limited, FY 21-22, CSR spending planned. Let us change the amount, rupees 5 crores. CSR project for such spending was donation to old age home. As on 31st March 2022, only rupees say 4 crores were spent by RST Limited. Hence, unspent amount is rupees 1 crore. So, how to deal with such unspent amount? First thing is, project is not ongoing in nature. Project is not ongoing in nature. Now, if the project is not ongoing in nature, then what will happen? Unspent amount of rupees 1 crore. How to deal with it? What was the law saying? Just see the law. Other than ongoing project shall be transferred. That means unspent amount shall be transferred to a fund within a period of 6 months. So what will happen here? Shall be transferred to, say for example, this is only example, PM care funds within 6 months from 2021-22, that is transfer this amount by 30th September 2022. Come to para 20, come to Kara 2020, para 320, auditors to report whether point 2 above is complied or not. You can take a screenshot of this illustration also. So I believe this is clear to each one of you. There are a few problems which can arise in your practical application. We have rule number 7, sub rule number 4. We have rule number 7, sub rule number 4, which deals with creation or acquisition of capital asset. So just see the fonts and the sentences written in blue, and then I will have the issues. Rule 7, sub rule 4 says the CSR amount may be spent by a company for creation or acquisition of capital asset, which shall be held by a company established under Section 8 of the Act, or a registered public trust, or society having charitable objects, and CSR registration number under sub rule 2 of rule 4. You know very well CSR 1 form was required to be filed. Or such capital asset shall be held by beneficiaries of said CSR project in form of self-help groups, collectives, entities, etc., or public authority. So basically what is happening, say you constructed hospital building. Now hospital building undoubtedly is a capital asset created by you, but that capital asset cannot be held by you. You have to have this capital asset being held by the beneficiaries or some Section 8 company established by you under Section 8 of the Companies Act. Now issues come up. The words used are held by, and that's why the issue would be issue number 1, whether held by signifies custody or possession only, or even the title rights. So if you constructed the hospital building, whether the title deeds of that hospital building will remain with you, or even the title deeds need to be transferred to such Section 8 company, because the words used are held by. So whether the words held by means physical possession or custody, or even the title rights, the law is silent. And accordingly, the auditors need to take a proper call onto that purpose. Number 2, whether capital asset held by specified entities signify that repairs and maintenance of such asset will still remain to be borne by the company itself. So who will bear the repair and maintenance of that very capital asset? The law is silent. Accordingly, the auditors need to take a professional call on this. Number 3, further say, if the Section 8 company happens to be subsidiary of the company as being established by the company itself, then can it be said that the company as a parent got indirect access right to such asset? Like in my example, it was Wipro Limited and Ajim Premji Foundation. Wipro created some capital asset and it was being held by Ajim Premji Foundation. Can it be said that Wipro even today is having that asset under its control because of its holding relationship with Ajim Premji Foundation? These are some of the open issues which are required to be dealt by the statutory auditors once they report under para number 3, subpara number 20 of CARO. Having said that, one more example. or I should say one more issue. Just see this one. Rule number 7, sub-rule number 2 says any surplus arising out of CSR activities shall not form part of the business profit of the company and shall be transferred to unspent CSR account within a period of 6 months of the expiry of financial year. So for example, you opened one unspent CSR account and you deposited unspent CSR amount into that account. The unspent CSR amount which you deposited in unspent CSR account earned some interest. That interest will be deemed as surplus arising out of CSR activities. We cannot take that interest as a part of my business profit, and that amount hence needs to be kept in unspent CSR account and needs to be spent within 6 months from the expiry of financial year. Now the question arises, what is the nature of unspent CSR account as on reporting date? So whatever unspent CSR account is there, what is the nature of that unspent CSR account? Can it be considered as other current provision? To my opinion, answer is yes. Unspent CSR account is one of the legal obligation on the company to spend such amount within 6 months from the end of financial year. That means 6 months period is less than the period of 12 months. So something which is happening within 12 months of the financial year makes it a current classification. And because your company is under an obligation to make that spending, it will be considered as other current provision. So you can take a note of this thing. Such kind of unspent CSR amount shall be considered as other current provision. See this one. Rule number 7, sub rule number 3 says where a company spends an amount in excess of requirement provided under subsection 5 of section 135, such excess amount may be set off against the requirement to spend under subsection 5 of section 135 up to immediate succeeding 3 financial years, subject to the conditions that the excess amount available for set off shall not include the surplus, and number 2, the board of the company shall pass a resolution to that effect. Now the issue rises, the law has allowed set off of excess amount, in the next 3 financial years. Question arises, since the amount available for set off can be carried forward for up to succeeding 3 financial years, the question arises as to what shall be the nature of such amount. Can it be shown in the balance sheet as an asset? If yes, then whether it will be shown as other current asset or other non-current asset. So my view would be the surplus amount which is available for set off, let us assume is rupees 10. Out of rupees 10, you expect rupees 2 to be spent, in the immediate next 12 months. So this rupees 2 will be classified as other current asset, and balance rupees 8 will be classified as other non-current asset. So my take over here is whatever excess amount is there which is available for set off shall be bifurcated into current and non-current category as the case may be. Let us take an example on the screen. Say for example, the company is RST Limited. Minimum CSR spending required was say rupees 100 crores. However, the company de facto spent rupees 10 crores. So rupees 10 crores is available for set off in 22-23. Let us take here like this. Now rupees 10 crores is available for set off in next 3 financial years. So it will be, first one is 20-23, Second will be 23, 24, and then it will be 24, 25. Now, what we need to understand, assume that the company expects rupees 2 crores to be spent in 22-23 and balance over next 2 years. So what will happen here? As on 31st March 2022, rupees 2 crores will be other current asset and rupees 8 crores will be other non-current assets. You can take a screenshot of this illustration also. Can you please tell me the journal entry for this amount? What will be journal entry for this amount? Let us have the journal entries also. This was the basic data. For 31st March 2022, what shall be the journal entries? Anyone from the audience who would like to tell the journal entries? Is audience there or not? So any journal entries? First will be CSR expenditure account debit, rupees 100 crores, prepaid, but I should not use the word prepaid. I should write rather excess CSR expenditure asset account debit, 10 crores to bank account, 110 crores. So this will go to P&L. This will go to balance sheet. You can take a screenshot of this one also. Let me proceed further. Now there are certain miscellaneous aspects as well. Internal controls need to be strengthened. You know very well that being statutory auditors, we are required to report about internal controls or financial reporting. Plus, under CARO 2020, there's a new requirement whereby the auditors are required to report whether internal audit system is commensurate with the size and nature of business or not. Having said that, what we need to ponder over is the board of the company shall certify that CSR fund is utilized for the purpose and the manner approved by it. Number second, there's a new requirement in the CSR rules, and I would suggest each one of the auditor to take a note of this second point. The rules, that is CSR rules, state that CFO, that is Chief Financial Officer, or the person responsible for financial management shall certify that CSR fund is utilized for the purpose and the manner as was approved by the board. So whatever certification will be made, I would suggest and recommend rather, such certification shall form part of your working papers. So always take the certification as a part of your working papers. Number third, the law says in CSR rules, the board of companies shall monitor the implementation of ongoing projects with respect to approved timelines and year-wise allocation. In board report, certain amendments are made. In board report, you have to provide disclosures about CSR, and following details are required. These are the new requirements: excess CSR spend carried forward and set off, surplus arising out of CSR projects, unspent CSR amount transferred to unspent CSR account and or Schedule 7 funds. Separate disclosure is required for ongoing projects and other than ongoing projects. And lastly, details of capital asset created or acquired under CSR. My humble suggestion is, whenever you make these disclosures or whenever you assist the board of directors to make these disclosures in the director's report, always correlate these disclosures with the details furnished by you in form number CSR2. So the precaution here is, if I write the precaution here is correlate the following also with form CSR2. So what will happen? The data which was provided by you to the ministry under form CSR2 shall match with the data required to be disclosed in the director's report. Now, what are the penal provisions? We do have section number 135, subsection 7, which deals with penal provisions. So under section 135, subsection 7, the nature of contraventions can be fourfold. So if there's a failure, let me highlight it. If there's a failure as to disclosing unspent amount in annual report on CSR, or transferring unspent amount into fund specified in Schedule 7 within specified time, like I take the example of PM Care Fund. Number third, transferring unspent amount relating to ongoing project into unspent CSR account within the specified time and or transferring amount remaining utilized in unspent CSR account after 3 years into fund. This should be remaining unutilized, not utilized. Remaining to be utilized in unspent CSR account after 3 years into fund specified in Schedule 7 within specified time. So if these kind of contraventions are there, then penalties can be levied on company as well as officers in default, and separate amounts are given. So if it is a case of penalty on company, the company can be penalized for lower of the following two. What are the limits? Twice the amount required to be transferred by company to the fund specified in Schedule 7 or unspent CSR account as the case may be, or ₹1 crore, whichever is less. If cases of officer in default, so whenever there is an officer in default and CSR provisions are contravened, then lower of the two shall be the penalty amounts. Number one, 1/10 of the amount required to be transferred by company to such fund, or ₹2 lakhs, whichever is less. So penalty amounts are huge now, and thankfully there is no imprisonment. If you see, the word is penalty, not fine. Can anybody please tell me what is the distinction between fine and penalty? What is the distinction between fine and penalty? Any answer? Distinction between fine and penalty. So you can take a note of this thing. Penalty can be levied by adjudication officer. I repeat, penalty can be levied by adjudication officer. For example, registrar of companies. I repeat, penalty can be levied by adjudication officer. For example, registrar of companies. Section is section number 454. Whereas fine can be levied only by the court. Fine can be levied only by the court of competent jurisdiction. Fine can be levied only by court of competent jurisdiction. Section number 435 is there for that purpose. So what you need to remember, because the word penalty is used, so there is no imprisonment. There is no imprisonment adjudication over here. So only monetary penalty is there, and this monetary penalty is a compoundable offense. I repeat, this monetary penalty is a compoundable offense. So dear Chairman Sir, Rajesh ji, this is it from my side. If there is any question from the audience, I would be glad to answer those questions. I have covered those avenues which are pertinent to accounting and auditing. I am not covering legal aspects because the topic is auditor's responsibilities, but these are some of the cases which auditors must be aware about.
The two questions I have compiled, and
So if there are any questions, you are most welcome. I know I am ahead of the time. I thought people must be having questions.
Are there.
No questions, so time was saved.
So few questions are there.
Yeah, a few questions are there. This question is, what if the company is used? I think this question is not properly drafted. What if the company is used the ongoing project amount to donate for an activity which is not ongoing project? So if I can correctly understand this question, correct me if I'm wrong, perhaps the participant is asking that the project was ongoing, like hospital construction, and the amount was meant for hospital construction, but amount was used for some other purpose. If it is so, it is the contravention of section 135. Penalties are leviable under section 135(7), and auditors have to qualify their report. When I say report here means CARO, para number 3, subpara number 20. So you have to give the internal qualification under para number 3, subpara number 20, because the objective of such spending itself is defeated. So auditors have to qualify, and for this qualification you can take a note. The applicable auditing standard is SA 705. I repeat, the applicable auditing standard is SA 705. For this other question, as an auditor, what is the reporting requirement if ongoing project amount is spent for other than CSR activity? The question is same as preceding question. So both questions are same, or I should say similar questions, but differently worded questions. So ultimately you have to qualify in para number 3, subpara number 20. Let me tell you one more thing. It may happen that CSR is applicable upon the company, but CARO is not applicable upon the company. I repeat, it may happen that CSR is applicable upon company, but company's audit report order is not applicable upon company. Then question arises, if there is any contravention, where to report? In such a case, if there is any contravention, then such contravention will be reported on the main face of the report, below the qualified opinion paragraph. Below the qualified opinion paragraph. And again, the applicable standard here is SA 705. For this third question, I would request Rajesh you to keep a separate seminar because the topic is altogether different, but I will brief you so that the things could be brightly addressed. The question here is, kindly help in guiding the linkage between triple bottom line, CSR and ESG reporting requirements. Some of our clients are MNCs and they're asking if they have to report on all these and what regulations we should be aware of for these three. So we are also advising several clients on this thing. Now, what is triple bottom? Let me discuss one by one. Rajesh, am I allowed to discuss this thing? Because this topic is a bit different from CSR.
Yes, sir.
Okay.
It's fine, sir. So we can discuss.
First of all, we need to understand what is triple bottom line. Triple bottom line means three things: people, profit, and planet. People, profit, and planet. Up till now, the focus was on profits only. Now we have a new requirement, and that requirement is known as sustainability reporting. Sustainability reporting. In sustainability reporting, the focus is not only on profits. The focus is also on two more aspects: people and planet. CSR is one of the ideology. CSR is one of the ideology to come up with this triple bottom line approach. So if you are doing CSR activities, on one hand, CSR expenditure will bring down your profit, but will enhance the credibility amongst the people and will enhance the goodwill on the planet. That is what the connection of CSR is. Then third is ESG reporting. ESG stands for three things: environment, society, and governance. Environment, society, and governance. And for this purpose, we have ESG guidelines given by given by NGRBC. NGRBC stands for National Guidelines on Responsible Business Conduct. All these things are interconnected, and you can take a note of one short form, SDG. SDG stands for Sustainable Development Goals. Considering this scenario, very recently, if my memory serves me right, in May 2021, SEBI amended listing obligations and disclosure requirements regulations, whereby regulation number 34 was amended, and top 1000 listed companies were given a mandate to furnish a separate report to be called as BRSR. BRSR stands for Business Responsibility and Sustainability Reporting Requirement. And in that very reporting requirement, a whole lot of questions are being asked, which is known as BRSR questionnaire. In that BRSR questionnaire, you have to report on many aspects. One of the aspects is CSR, one of the aspects is ESG, one of the aspects is triple bottom line as well. Let me give you an example. Say your company is manufacturing chemicals. The net profit of the company is rupees 10 crores. So normally people will say the company is having a profit of rupees 10 crores and matter is over. But when you will move from one bottom line to triple bottom line, the company's valuation will undergo a change. How it will get changed? I will do ESG valuation. Net profit as per P&L rupees 10 crores. Less probable penalties that can be levied due to environmental damage, rupees 1 crore. This environmental damage is nothing but planet. Less compensation that may be required to be paid for rehabilitation of people affected by pollution, rupees 2 crores. So 10 crores minus 1 crore minus 2 crore will give you sustainability profit of rupees 10 minus 1 minus 2, that is 7 crores. And that is nothing but, sir, triple bottom line profit. So this way valuation will undergo a change, and this is nothing but the new concept of ESG valuation or sustainability reporting. Am I clear, the gentleman or the person who asked me this question? Rajesh, is it clear?
Very clear, sir. Very helpful, sir. Thank you so much.
Thank you, sir. So now I must say the person who asked this question and other people also who are listening me, we all chartered accountants and all professionals for that matter should explore the area of sustainability reporting. I am doing sustainability reporting since time when it was not even mandatory, and this is the future. Wait for 2-3 years. Sustainability reporting is going to be mandatory even for non-listed companies. As on date, it is for top 1000 listed companies, but in times to come, it will be mandatory for most of the big companies, listed as well as unlisted. And it is the right time where we chartered accountants should, transform ourselves into sustainability reporting. And being Rajesh, my good friend, the chairman of CSR committee here, I would request and recommend Rajesh to organize programs on these kind of topics, because it is the future of the country like India. And the good thing is, chartered accountants in India, while sitting into India, can provide sustainability reporting services across the globe. So it's a wonderful opportunity for us.
Well planned, sir.
Yes, sir.
When people like you are there, we are ready to agree.
Oh, thank you very much, sir. Thank you very much. Any other question? But this is the fantastic question, a kind of question which is new to each one of us, and a kind of question which is throwing upon the opportunities for future. So no questions. It seems like it is all clear.
Yes, those were the questions, and there were some responses, but we are unable to see it, sir. Something I have asked them. Rajesh sir, over to you, sir. Thanks. If there is any question, we'll send it in over mail, sir. And many were requesting for a PPT, so circulation among members.
PPT I will share you immediately. PPT I will share.
Please. We'll share along with the recording so that they can see the.
Sure. PPT I will share immediately after the closure of session.
Sure. Thank you so much, sir. Rajesh, over to you, sir.
Dear member participants, that I think even though it was a Sunday evening, we would have we had many good participation from the members, and it was highly interactive. Having a wonderful speaker here, he made it more interactive, and many of it. It was like even a person who was not aware of the CSR or not aware of the provisions of the provisions now would be very much clear with what is his responsibility with regard to CSR and what are the ways he has to report it. So I'm really thankful to my good friend and a wonderful speaker for your wonderful clarification and wonderful presentation on this topic. Really, thank you very much, sir. It's like on behalf of all the participants, we are also on behalf of the SIRC of ICAI. It's a great pleasure to have you here, and we expect you for more programs at SIRC and all branches of SIRC also. Thank you very much, sir, for sparing your time on the Sunday evening beside your tight schedule and being an author of a lot of books, lot of sessions on seminars going around all over India. I'm really thankful you've given us the time. Thank you very much for being with us, sir.
Rajeshji, I have shared my PPT to Monica madam. You can take PPT from Monica madam.
Yes, sir. We'll share the recordings along with the PPT to all the participants for benefit. Thank you so much.
Rajeshji,
thank you very much, sir.
Permission from you.
Pleasure, sir. Thank you. Thank you.
Thank you, organizers, and thank you, audience, for giving this time to me and listening my boring lecture altogether for so much hours. And thanks to the team, the support team who supported me for this session. Thank you very much.
Thank you very much, sir.
Okay, Sirji.